All right, good morning, everybody. How's it going? Today's Wednesday, August the 13th, 2025. So, let's see, we're making all-time highs here on the US 100, which translates to all-time highs here in the NASDAQ. And whenever we're in a situation like this, again, it's always like, are we going to continue extending up forward? How far are we going to be extending? These are questions that I used to ask myself a lot. I mean, not that I know exactly where it's going to go, because nobody knows how far it's going to go before it starts retracing again. But it could make some standard deviations, some projections, if you will, in the form of standard deviations to estimate exactly where we're going to be heading up to. At this time, the ones that I can see are these these two standard deviations that were met. So if we zoom out here at the weekly chart, weekly analysis, sorry. Since we're not there at the half week point yet of the week, half week point it will be like today at 11:30. That'll be like the midpoint of the midpoint. That'll be the most, yeah, weak points for me. So let's see here. Since we had this breaker on going on around here, I took that breaker block and made projections upward, and we got a standard deviation of 2. And that's the kind of like where price ran up to yesterday to meet that 2 standard deviation level. So that's kind of like where I was projecting it to go. And now we're stuck here in the week. Hang on a second, guys. Very good. So you see that we had this bearish breaker formed here. It'll be referenced until 9:15. And notice how after 9 o'clock, we traded above it, treated it as support. Look at that wick, and expanded up higher. Ideally, we'd like to see higher price action, as we are in all-time high, so we are in an extreme buy program. Let's see here. Forgot to connect this guy. Okay. Now today will probably be a short one as I gotta leave for some early for some things too. So I mean, I think it'll be like a regular, 9 to 11 kind of deal. But yeah. I think it should be okay in terms of live streaming today. So that was the projection that was based off yesterday for the weekly. We had a weekly analysis. We had a breaker block here form. So we wanted to take those standard deviations going up. And that's where we kind of met up with that level. Let me clear this, it's a little confusing. So the breaker block for me was right here. This little small piece of price action. That high, higher low. They didn't close below the external range low here, so I would consider that still within its range. So I'll get the composition of that for this 15-unit cycle. Price balance this high to this low, and this low to this high was met with sell side, then buy side delivery. So this area is balanced, but is also, in my eyes, a breaker block. Right? So you take the lowest point, right? Which is like from this high to this low. So we'll take that. Okay, that's our actual true big breaker block. Then we'll do projections, and then we'll press hit OK. You see that two standard deviations was met here yesterday very nicely, almost calling the high of the day. And now this breaker can still be referred until 11:30 today. So I'm going in there with my standard deviations and seeing how else further we can go with this, right? So we'll see that the next third standard deviation is right here. Okay, so that's a level that we could be seeing price head up towards before 11:30. Okay, we want to see these levels get reached for at 11:30. Perfect, you may say. Now, how would you interpret that on CFDs? Because remember, we're looking at the breaker. I'm sorry, we're looking at the at the futures market. But now for CFDs, it's a different story, right? So for CFDs, we have the same similar structure here in place. So this was our breaker right here, and we'll move our standard deviations accordingly. You see that on CFDs too. 23,851.7. Okay, we breached a little bit above it. That's good. And then closed just below it. Now, how much further would be the next level? It's 948.2. So far we can go for the third standard deviation. Okay. So I'm going to go ahead and disable the weekly analysis and enable the daily analysis. What do we see here? We don't see any projections. We see a bunch of what they would consider type 2 dealing ranges or relative strength ranges, meaning that it's one of the strongest inceptions of price expansions, where price literally made a failure swing not once here on this lower time frame, but twice on this higher time frame, 60 unit cycle. So if it's doing it on 16 unit and 15 unit, this to me indicates strength, that we're going to be heading up there somewhere very quickly. So not bad, right? We got this one and we got 2, but as long as when price tends to reverse back and refers back to these type 2 dealing ranges, they're easy targets for when they come back down. So just something to keep note of, right? So it's 9:15 now, so we have an update in our cycles or structure. What's all this stuff? Let's see here. Same deal. We have a failure swing range. Hang on. 23,931 to 1.4. Okay. So I'm interested in having it tap here. There's a very tiny form of mitigation block here that I'm eyeing. Would be from here. So I'm interested in seeing that little small balance of price, or in this case might look like a volume imbalance. I want to see price tap down here again. Didn't break the structure out here. Okay, so I don't consider that a qualified dealing range just yet. Sorry about that. So now, seeing this small piece of price action that has been balanced, we have the composition here of a high to low, higher low, lower high. Now, because this high didn't break the external range structure of this, I interpret this as it's still contained from within, so this little small piece of price action would be relevant until 9:30. Okay? And the idea is that this structure that's in place, that's going to be in place in the future, will be referring back to this balanced price action so that it can continue up its expansion to break through the external range liquidity that's rested above this buy side liquidity pool. Okay, so that's why it's all must occur before the end of this time cycle, ideally, right? So it's a framework. Right, but we also have here a rejection block, right? So let's see how that price reacted there. So you see people would interpret it as S&T, look, high to low, high, lower high, high, equal highs, more or less. Let's see here. To 40.57, where are you? 24.57 and a half, right there. Would be our projected high. If price is going to continue expanding upwards, let's see how it will continue to go up that way. So on the previous cycle, we saw that at 8:45, right? We had this bearish breaker. Where is the true bearish block? Right here, right? Because this was the inception of the move that created a new higher high before it was brought back down to create this internal range like swing low, if you will. Right? And it's internal because it didn't expand below 830's low. Okay? So with this, because of this, we had a small breaker form, a small bearish breaker. So, but we're bullish, right? So if we have somewhere to be at, right? We saw two, not one, but two price legs that is, in a way, kind of could be interpreted as like strong price act moves, right? Because they're failure swings. They're not looking to take any more sell side. When price returned down here and expanded up higher, that immediately became and bearish to an inverse bearish breaker. So I want to be treating this as a discount array so in order to take prices going up where? Higher, to meet the third standard deviation high. So in that range, when they came back down here again, you can get a 75 or at the 100 level, you can get at the upper quadrant of it. So you set a stop loss up till here, to the low of the breaker. And look at that, 3 handles. Aiming for where? Up here. Right? And now the objectives are changing. Now we have this little small form of balanced price action. And we're going to see if that will take us to go up higher. Okay? So this would have been an insane stop, 3 handles. So imagine something like that. You risk 1 full contract. You don't even have to worry about an actual, worry about your solids. You'll get tapped once, left. This would have been scary. You would have been at break even already because it's a scalp. Because we were finishing up that 15-minute cycle as well, right here. So as soon as it tapped 915, break even immediately. Boom, you're protected. And look, it's expanding up higher. 13 handles. Whew. You know how much handles are in not MAQ, on NQ futures, on micros? Sorry, on the N mini? The NQ mini. Sorry about that. Do you know how much a contract, do you know how much a handle is worth on the minis? On a mini NQ contract? It's like $20 per handle. Here we made 13 with a projection of making 27. So imagine like that. Each handle is worth $20 times 27 handles. Okay, that's 540 per contract. Wow. And what's the limit on some of these prop firms? 5. Insane. Insane profit objectives. Well, let's see if we'll reach up to the third standard deviation. To me, these are the kinds of trades that I look for. The ones that are not even 5 handles. They're just less than 6 handles is preferred, actually. Those are the kinds of trades that I'm looking for. You just buy one. You just buy one. You'll buy one full contract of NQ. Still trying to understand the names right. Not the macro, the mini. You get one mini contract. And even if it stops you out at 6 handles, you're still not, well, depending on what you're controlling, right? It should not even stop you out like a 0.5%. Now, I know some people are doing the that prop firm in the US. It's the top stop, top stop. I'm not gonna name it. I'm just gonna say it funnily. I'm not being sponsored, but people are making their $50,000, test account, and in the futures world, I've always got so confused about calculating like how much my position should be, how much percentage am I risking, can I squeeze in as many contracts to fit my risk tolerance. So risk tolerance per trade is 1%. The risk tolerance per trade, it's this is good. It's good to see. Like before, and when I would enter as if you were treating this as a 20 handle full stop run for 1%, you can now do just 4. Okay, so notice how the risk has been reduced dramatically. Your earnings have been, decreased too, but at the same time, um, it works out a little different when you're doing, futures, because now you're referring to the full standard risk that you were going to take initially and going for it at a 20 handle, profit. It may not seem clear to me, or I may not be able to explain this right at this time, because I'm focused on a bunch of other things right now. But um, that's the general gist of it. I feel like that's been one of my strengths in getting better with risk management. So with only 10 seconds left to go, we're going to see if the 9:30 open will get us to reaching this new third standard deviation projection. 5 seconds left, and it's 9:30. So will we see the third standard deviation get tapped today? Now we have uh, new structure in place. So we have a high. Okay, we have this now. Look at that immediate repricing to get that all those stops. Look at that wick down low. Wow. Now, just by looking at this very quickly, I will see this entry as a form of OTE. Yep, something like that. Look at that reaction at the 705 level. Immediate price swing up, going upwards. Why? Because this balanced price age is stacked on top of this balanced price balanced price range as well. So there's two swing lows here stacked together. We have somewhere to be. We're creating new highs, we're in new high territory. Of course, this will be a nice spot to enter at OTE. And you've seen me do that trade before, live. So I just seen it again here. Okay. One of them trades right here. 6 handles. Did we match the profit objective? Yes, we did. We did it on CFDs, and now we're going to see if futures does the same. There we go, buddy. Look at that. So we've met the third standard deviation high. That to me would have been done. You enter one full mini contract here. Could have re-entered here again. I mean, the results speak for itself. You made 27 handles plus 19 handles. Wow. 27 plus 19 handles. Hang on. Let's do 27 handles times. It's 20 because it's $20 per handle. It's 540 per contract, so we'll keep the 540, okay? And then we'll do 19 times 20 plus the 540. Done. There you go. Nice day, huh? And that would have been it for me. Unless you let a little runner run, see if you can meet up to these projection times, maybe to full symmetry. Okay, and I'm gonna do this to clean up my charts. I also have these old liquidity pools here kind of marked up just to see how the old highs and old lows were reused when price created a new swing. See that we on Asia we create that Asia low and refer back to that pre-Asian sell side liquidity to go back up. Same thing here too. We left behind some midnight sell side liquidity that was referred back to again, right, during the London kill zone to expand higher and eventually meet the Asia. And in between these two liquidity pools, I like to use it as like an event horizon kind of trade. Getting on the discount portion of it and then see if that will take us to go higher. And it did. And use this Asian buy side liquidity as support here. Just making the swing low. Expand it up higher to new high territory. And now I'm looking to see how the pre-market here was used. The high, retrace back down to discount, expand higher. Okay, and then now I'm going to see the embargo lift here if we have made something that can help us here. 9. Okay. And I'm going to put on my music because I can't hear anything. Look at how that standard deviation was used as support there. Straight it up, the body's here, telling a story. This is the part where I don't want to get in the way of this. There's a lot of emotions rushing up here. Just think about this new highs. It would be the best interest of both parties for it to go up higher to continue that expansion, or we've topped and now we're going to go down lower. Since I don't like predicting the call of the swing high or swing low, we can already project towards it. I don't want to claim that this is it. You know, I'll play with whatever it's given to me, and I'll adapt. Sometimes the best portion is to just let it rest, like let it be. Come back at 9:45 when you'll get a brand new structure, and then see how you'll go move on from there. But from what I'm seeing right now at this time, is that we made a low to high, lower low, higher high. So that's a one of those like this. Getting a little ahead of myself, but this is what I will be referring to. And it's stacked up again with this lower swing. So I'm interested in seeing this like this an OT entry again in the future and seeing if that will probably take us higher up. Okay, but we have to be contained in the next 4 minutes because this is a little bit ahead of ourselves. You gotta let it do its thing. That's why it's interesting how it's forming its new structure in place right now. We're at 43. Wow. Anything can happen in just 1 minute. Volume imbalance. We're not seeing that here right now. Futures. Okay, a minute and a half. Okay, so I'll use this minute and a half for a bit to step up. So I'll be right back. Okay, so now it will be seen a new cycle, and we have it. We have what we have, and we'll see if that will get us the reaction that we need to get seed prices to go up higher. Now, what I don't like about this trade, the way that it's being presented, is that we have already referred to the 705 level before the new time cycle even began. So I'm looking to see if that swing low will remain protected. Okay, no, it didn't. So that would have been a no-no on the trade. What's next? We got here turtle soup. If this level has been referred back to, would turtle soup make sense here? Something like this. Seeing that it is stacked on top of this balanced price range as well. So far, we're getting a healthy reaction, reacting up that old low. So again, if we were looking at initially for it to react up to 705 level, but seeing that it had already referred to it before the new unit cycle even began, that was kind of giving me this confidence that it will want to continue to go up higher using that level. So what's the next level that we can refer to? The old low. Why the old low? Because it's stacked on top of another failure swing low that is also balanced in terms of price range from this high to low, from this low to high. Sell side delivery was met with buy side delivery. This area has been balanced, but it's also in the form of a failure swing. So coming back down to it, I would like to see it respected. In what way? Tapping under the old low here in the form of turtle soup. Seeing if it'll go up. So far I've given you 3 entries, right? We had that inverse breaker, we had that OTE entry coming back down, and we had the turtle soup entry now. All aiming up for higher prices. Look to see if it'll expand up higher to meet this external range using the bodies. Where there's our first percentage fair value gap lie? Lies down here. Things about first percent fair value gaps is that if there's a liquidity pool that's resting up above, I would like to see how that would be used to take things up going up further. But seeing that there's no other old high here to refer back up to, I'm a little weary in trusting a fair value gap to go up. Instead, there's a sentiment of if I was going to take a short below here to take things down lower, but the thing about taking the shorts right now is that we're in a higher time frame bullish buy program. So the only lows I see it referring back to are probably the CME open lows, but I mean that's going against the bias. Have we even tapped these lows? No. I'm referring to futures, and everything appears to be balanced so far. This is just a test demo. I really wouldn't want to be going up against a higher time frame right now. But this is an idea. We'll see maybe if this is what bears are looking at today. We have already met our third standard deviation objective. 705 has been traded too. Old low has been traded too. I mean, what else? We could refer back to these, since there's nothing else much more high except for another standard deviation. But I don't know, with this jitteriness in the price, that's kind of like what's making me eye this idea that perhaps we're going to be heading down lower to CME open. We'll see. But again, I don't want to be going up against this higher time frame. Because look, we have another turtle soup that can happen right here. And this turtle soup can help us keep going to higher prices. So all right. Okay, there's this liquidity pool that we were saying here. And it's almost 10 o'clock, so we're also in that place of that macro. So all these ideas, I mean, I've been giving you, have they been like, holding on for the long term? They've been just really like scalps. Let me just go up here, down here, here, go up here, go down here. Like this is what I'm striving for. This is what I'm striving for. To be able to read the market as such, to be able to be confident in that we can trust a move like this, going up and down, creating the whatever session we're on. But at the same time, we're in here to make money and protect our capital. So we have as many, although we have a lot of ideas on how to get in and out, which ones are going to be the best ones for us to just take to be able to make our bread and just leave. We don't have to be here. What low is this? The A30 low? I wonder if we've referred to it on others. Well, not yet. Okay, so it's finally 10 o'clock. So what kind of structure is in place now? Right here. Slow was not met with this low here. Let's have this bearish breaker in play. Low to high. Okay, we have a dealing range that is currently being theorized that it's a quarterly shift, or think of a market structure shift. And then lastly, we have this in play. Alrighty. Okay, so what am I also looking at here? We've created a brand new high, never been explored before. We also have some sell stops here. If we're going to continue this expansion to keep going to create new higher highs, we're going to refer back to this old sell side liquidity pool. Okay. On top of that, we're not seeing the other indices tap this low, are we? So that's a form of SMT. Okay. Price is going to tap down here to this low, make its little low, expand higher, possibly create the displacement that we need, and then we can get on an order block down here below that, and then continue that buy price that buy program aggressively high. Okay, that's the entry that we've been looking for as well. But it's all a matter of if the market will give us a swing low to play off of. If not, I mean, there's also this. This will also get in the way. That bearish breaker, this type 2 dealing range, right? And then we also, yeah, we're stuck in massive dealing ranges right now, creating new lows. If we're going to start heading down lower, we have the Tuesday PM sell side liquidity from yesterday. So we could even see these levels be referred to and act as one's support, right? Not once act as resistance, kind of refer back to and act as a reclaimed premium array, old high. "20 seconds to see if this will react in a way." Alrighty. So that was one idea. That didn't pan out. No worries. Okay. So that leaves us with Tuesday's PM sell side liquidity, old low, discount array that we could possibly be heading towards too. All right. So it's 10:19 now. Let's see what we have here. And we've made a new lower low here. A low, now a lower low. Now we shall see if this will be traced back up to 75% or back up to these highs even. Look at that. Look how these highs intraday refer back into this. Waking out of it too. Spanning down lower. Now because this balanced price action is aligned with this bearish block, bearish breaker block, I'm curious in seeing this behave in a manner of a OT entry again. Something like that. So retracing back up to these highs, referring it as OTE. Let's see if that will take this down lower. Down low to yesterday's PMs. Something like that. Windows. Those old highs really acting as a form of premium, huh? Look at that. Now I'm curious, how will this behave in the form of event horizon? If we have these two liquidity pools stacked together, where's the premium side of things? Right up here. What's aligned with that premium? This fair value gap. Civvy, another civvy, take the premium entry. We're also at 10 o'clock, so we also have the chances of silver bullet, but what gap here? Take a look at the quarters. Down here's our target. We are also approaching 10:30 now. So what kind of structure do we have in place? Getting a little bit ahead of myself here. I like that turtle soup if it's gonna refer back to closing down on it. Because look, this was acting first as a premium ray, right? Think of resistance. Break through it, okay. Act on it as support now. Turn it down, turn it up. All right, y'all. So let's see. So it's been having a tough time reaching down to that sell side. I would have preferred to have seen it reach down there before lunch, but seeing that it might take a little bit while longer, yeah, it might take a little bit while longer before we reach to that sell side. That's what I would like to see. After we have reached the third standard deviation high, and seeing that price needs to retrace back down, we are seeing this old balanced price range be reacted to right now. I don't think it will hold. I just think it's just a matter of the markets right now, how they're consolidating like this, ugly price action, and reaching down to here would not be it either because we're going to be changing structure in a couple of minutes by 11:30. Okay, so yeah, I'd like to see these get breached. If not, it's okay. All in all, we had this morning amazing price action dealing going upwards, meeting to that third standard deviation. So that'd be really cool to rewatch then. All in all, and I'll catch you in the next one and see if we'll reach down there eventually.